Bitcoin at 200,000 is going to look very different. And then it's not like, it's hard for it to go up by another 100,000. So you go up to 300, right? Mm-hmm. And you see, a couple more Omega candles getting us to 500. And at that point, we've reached, half of gold's market cap. And at that point, I think you start to demonetize gold, because people with allocation to gold will see that, Bitcoin just went from 0 to 500,000 in maybe 17 years, maybe 18 years. We'll see. But that is a really crazy realization that will dawn on them. And then you start to demonetize gold, and then you just double again to get to 1 million. So that's kind of the path I'm seeing, that things change as Bitcoin levels up.
Samson Mow predicts that Bitcoin could reach $1 million, outlining a roadmap that includes surpassing $200,000, breaking through $500,000, and ultimately demonetizing gold. As Bitcoin adoption accelerates, its market cap could reach parity with or exceed that of gold, triggering a massive reallocation of capital. The forecast implies a potential 100x return from current levels, which Mow says every Bitcoin holder must understand. Make sure to watch this next clip, where Samson Mow shares his insights into Bitcoin's journey to $1 million. Also, if you're enjoying our crypto content, hit like, follow, and subscribe by clicking the link in my bio. It only takes a moment but makes a huge difference in helping our network grow. Plus, you'll get free updates, expert forecasts, and the latest on-chain data, all free of charge. Now, let's jump back into the video.
I think it's either at the 500,000 mark or 1 million mark. Somewhere in that range is when people stop wanting fiat. Mm-hmm. So there's a lot of models out there. Saylor has his Bitcoin 24 model, and then there's Power Law, and there's all these other models. None of them actually choose a break point. But you're right, there is a breaking point. It's not going to coexist forever. It just... I think that's a pipe dream. We'll always have this exchange rate, and we'll be trading Bitcoin for $100 million, and we'll make new fiat with more zeros on it. I don't think so, because Bitcoin is a far superior technology. It's like 100x, if not 1,000x, on anything we've ever had in the past. Right? Being able to transport value for a few dollars instantly across the planet with finality. That is a big game changer. And most people don't understand that. Most people don't even know what finality is, right? Like, they don't understand that when you pay with your credit card, that's not final yet. It's finalized weeks, maybe months later. But it's almost like all of this stuff about how money works is a lost art. I mean, Tether is also mining Bitcoin with their yield from the T-bills, right? So it's sort of like they're participating in this market, providing a service that people want. And there's like 400 million some odd users for Tether around the world. You can't just remove that and say, everyone's going to use Bitcoin, because most people don't want Bitcoin right now. And that's just a fact that we have to acknowledge. They just want dollars, whether it's physical dollars in their local bank account, or a digital dollar from Venmo or PayPal, if they can get those accounts, or a digital dollar via Tether. It's just different transport mechanisms for that same instrument, a digitized dollar. So I think you have to serve that market. And I've heard people say that stable coins are an attack on Bitcoin, or stable coins are a CBDC. But you're kind of reaching there. A CBDC, by definition, is from a central bank, right? Mm-hmm. A private stablecoin issuer is not that. Even in Canada, when we had the trucker protest, and the government was freezing funds, they had to go to the actual bank, not the central bank. So the central bank is almost an arm of the government. At least there is a step between government and the money. So they couldn't just tell the central bank, freeze these accounts, which they would have done if they could have done. Mm-hmm. But they had to go to the actual bank with some order from a court or a judge, and then attempt to freeze them with some reason. And I think it's the same with stablecoins. The central banks won't be able to do that. So it's still a private issuer of a dollar instrument. And as for prolonging and expanding dollar dominance, I don't really think it would do anything outside of just, the current system. Like, if they didn't exist, I don't think we would get into Bitcoin faster, I think someone would create some sort of instrument. Maybe it would be an eCash, or who knows, right? But there'll be something filling that market void for the past decade or so. And that would be the thing that kind of holds it over, because there is just demand for this product. There is at least $115 billion worth of demand for this type of instrument. And I don't think you can really deny that, right? If it wasn't Tether, it would be someone else, right? The demand will be met by some sort of product. But even like Paulo and the Tether guys, they don't seem to think that the dollar is going to last forever. It's just an interim step on the road to Bitcoin adoption. But it is still a step that's needed, because a lot of debts are still denominated in dollars, and people are looking to settle those debts. And it's still mostly the unit of account for trade. I don't think it's true that people won't lend their Bitcoin to generate a yield, right? I mean, even before the dawn of fiat, people would lend gold or silver to earn interest on it. The question is, we're in this really weird transitory period between Bitcoin and fiat, where there's a lot of risk there, right? Like, can you, like, first of all, there's custody risk, and there's all this kind of the crazy schemes that have went on with yield generation, like Celsius and everything else, right? And that is one part of the risk. But the other part is, would you actually generate a decent yield on Bitcoin? And what do people borrow Bitcoin for right now? And that's largely to short or to use as collateral. But at least in the years prior, I think a lot of it was just for trading. You borrow to short. And I think as you move more towards companies that are generating yield on Bitcoin in, using it as collateral or something like that, I think you're going to still have a lot of risks, because, shorting with Bitcoin is a directional trade, which is really risky, especially if Bitcoin moves. And then you can get things like the Celsius debacle and everything from those crypto guys and their cool hedge funds. But I think it's not that it won't work. It's just we've been so far removed from the idea of lending a hard asset that it seems odd, especially if Bitcoin is going to increase in value massively, right? And the yields on dollars are higher. So we're kind of at this weird place where nothing is either one way or the other. But I think in a post-hyper-Bitcoinized world where everything is Bitcoin, you will have people lending. And I think deflation is not necessarily a bad thing, because technology is inherently deflationary. And we should always be advancing technology. And that relates to energy production too. So everything should get cheaper over time, assuming the money supply was not bastardized. Well, if you look at history, a lot of times when the economy or a country's situation is dire, they look to target the wealthy people, and they will create reasons to target those people. And you still see it. I mean, a lot of the more left-leaning politicians love to say tax the rich, but they never say, let's figure out how to generate revenue or make money or anything like that. But you can only tax the rich or take from other people to a certain extent, because the demand for money is unlimited. Like, you could take all of the wealth of the top billionaires in the world, and it would be burnt in a day or a month by the government spending. So that is really not a solution. But we know again from history that when things are bad, the people that are not poorly off are going to be targeted. So you should do what you think is necessary to protect yourself from that possibility, and your family, of course. But if you want to make a difference, I think you have to get more Bitcoin adoption into the world. And this is why we do what we do at Gen 3, because, if there's only a handful of us, how many Bitcoiners do you think there are, like on X? Well, let's say like 100,000. Maybe there are a lot of lurking, right? Who knows? Yeah. But that's not a lot. And, if that's it, then we're very easy to persecute and go after. Right. So you kind of need to get Bitcoin into the hands of more people. I'm not saying distribute your Bitcoin, but nation state adoption, I think, is a very effective way to have a country adopt a Bitcoin strategy and use that Bitcoin strategy for good. And that is tapping into energy. Bhutan, again, is a great example. Very high per capita Bitcoin per person. They have mining operations. They can support themselves indefinitely by mining Bitcoin. And there are many examples of this model, like in the Middle East, like the UAE or Saudi Arabia, where the oil can finance everything. You don't need to tax the population. But to get from, the possibility of mining Bitcoin to mining Bitcoin, there's a road there, right? And it's plagued with barriers and obstacles and everything. And those are the things we have to get around. But just taking Canada as an example, I haven't run the numbers for a while, but like 4 years ago-ish, you could fit 3 entire Bitcoin networks in Canada. And now maybe it's 1, maybe 1.5 networks, but that's still massive. So the potential for a lot of countries to mine Bitcoin to finance themselves is massive. And it's not just countries with hydro. I mean, like the Philippines, Indonesia, these are like the top 2 countries with the geothermal potential. But to tap into those geothermal reserves takes time. To build up mining farms and get the equipment takes time too. So I think this is the way we have to go. If you're really trying to, plan ahead and plan for a better future with Bitcoin, I think it is helping us, or just doing it on your own if you don't want to work with us, just to orange pill the countries to get them self-sufficient in terms of Bitcoin. And that is probably going to make the biggest difference, because they'll be able to finance social programs and, all these things that will be needed if fiat dies very rapidly. There's going to be a massive competition to attract capital and to attract Bitcoin, and by that extension, Bitcoiners. So all of these things that are welcoming are going to be done, and it'll be this huge competition. So possibly zero tax. Possibly no capital gains. Hard to say. But the thing that most countries need to understand is you can't be the last one that opens up the door and says, here are all the conditions why you want to come here, because, someone will have done it before you. And then it's like, yeah, okay, well, now what? Like, yeah, okay, no capital gains here, but no capital gains in the US. Which place would I rather be? So the more disadvantaged you are in terms of attracting capital and attracting Bitcoin, the sooner the better for implementing some strategy that welcomes capital. And I think it's starting to be understood that money just can't be printed indefinitely out of nowhere, right? This is why I think that the left-leaning people in the US, Democrats, they're angry about Elon's cutting of their money printer, right? All the funds in US aid and everything like that. That was kind of like unlimited capital for them to deploy. And without that, maybe they're coming to the realization that money is actually important, that you can't just print it out of thin air or take it from the rich or tax from the rich, because it won't work. But maybe this is sort of a wake-up call. And I think it's also a wake-up call for many countries to understand the nature of the business they're in. They are in the business of running the country to grow, to attract money. And that's really what they have to focus on.
Thanks for watching. Don't forget to like and subscribe.